Good morning, traders. Today is Monday, June 21st. My name is Charles, and this is the Pirate Traders live stream. Okay, well, we're going to start today the same way we ended on Friday, looking at the daily chart over here on the S&P futures. Okay, it's just worth noting that we are now in a downtrend, right? We can clearly see it in the candlesticks that we are now in a downtrend. On Friday, we broke the 50 moving average on the daily candles, and that is extremely bearish, right? Normally, when you break that, you have to pull lower to find good support. So we pulled back above it in the overnight, but the reason that I wanted to start the day here was just to show you this downtrend so you can visually see that on the daily, the market is selling off, okay? And we're going to keep that in the back of our minds as we move forward with our analysis this morning. Okay, so the overnight activity was very interesting to me. It started lower. The market closed on Friday down here, and the market spent most of the weekend trading down in this lower area. Let me just expand out this profile really quickly. Okay, so what you can see happened was they pushed lower, right? They were trying to push prices lower. They created a poor low here in the overnight, and then they started to push prices back up. Now, what happened was when they got back up into this range where they had been trading throughout the morning, they had a short covering rally, right? So this push, this instant spike higher, is most likely short covering, right? It's people that were piling on the way down who then didn't get anything for it. They got squeezed out, and then the market pushes back up higher. The thing about a short covering rally that's worth noting is it actually makes the market weaker. Even though it pushes prices higher, which can often trick participants into believing that the market has recovered, right? That it's ready to push higher, that we might be getting this V-shaped recovery. That's just a trick, right? Because the short covering actually takes buyers out of the market, making it weaker. Well, what do I mean by that? If you're short the market, the only way to exit your trade, the only way to ever take profits and go flat is to go long. So once you go short, you are a buyer in the market. You're guaranteed to go long. And so when you get a short covering rally like this, then you take all of those potential long trades out of the market. You also bring in FOMO longs, right? New longs that pile on there. But then because that push higher wasn't due to the market being ready to move higher, it was just those shorts being squeezed out of their position. When the market doesn't stay up in this area again, you lose those buyers once the market starts to sell off. So it actually weakens the market to push higher like this, okay? So today in the market open, I am taking on a slightly bearish tone due to the overall trend being lower, right? As I showed you on that daily chart, the overall trend is lower. So I'm going to assume some bearishness in here. And when I add in combination with that, the short covering rally that we had in the overnight and the fact that we left a poor low behind down here, all of that in my mind increases the odds that this area that we're in right now, that we're opening in, is not necessarily a good place to do business, and the market likely needs to pull back, at least to the base of the single prints from the overnight, which is going to be right here at 41.5350. Okay. So we are opening inside of yesterday's range. I mean, we already opened, but we're opening inside of yesterday's range, okay, which increases the likelihood of chop early this morning. First week reference from Friday repaired. So I'm not looking to jump into any trades right away here just because we're opening inside of yesterday's range. I need to wait for the market to give me a better signal. And I'm also just keeping that potential weakness created from that short covering rally in mind as well. Looking for support at the base of the spike down from Friday, if not the single prints from overnight. And if those cannot hold, the low from yesterday. Okay. Market internals opening bullish, but let's give them some time to settle in. Very thin volume all over the place here. Increases the odds of chop. RK Leon, just seeing your comment there. Opening above that 50 daily moving average, does that bring in the mother of all bounces? Again, it's possible. Always open to whatever the market wants from its perspective. But as I mentioned with that short covering rally, I don't think there's as many buyers in the market as it might make you think with that short covering rally. Good morning, Naif. Good to see you. Welcome. RK Leon, welcome. Parlin back with us. Good to see you. Welcome. Hi is here. Good morning to you. Ashik is back. Mediterra is with us. Good to see you. Stanley back. Good morning. Ricky Bobby in the house. Good to see you, Ricky Bobby. Marco is back with us. Good to see you. And Malcolm. Good morning. Malcolm, are you a gambling addict? I saw you on the overnight too. Like last night when I first posted it, you were there. You must watch markets quite a bit. Chris, good morning to you. Welcome. That's cool, Marco and Malcolm. Good to hear. Good morning, Nor Trading. Good morning, Nav Trader. And Phoenix, I wasn't watching the chat. I just kind of turned it on and left. But I assume Rosie had some interesting comments. Good times. Okay, this is not good taper on the low. So the high of the day, the A period high is weak because it is one tick from the overnight high. Okay, also one tick from a weak reference that we left behind from Friday. And the low has bad taper, increasing the odds of chop early this morning. Oh, a good old spam bot conversation. Good times. Good morning, Kwaku. Good to see you. Welcome. So, for those of you just piling into the stream now, opening inside of yesterday's range, increasing the odds that the market will need to chop early this morning. We are in a longer downtrend on the daily, worth keeping in mind. We also got up to these higher prices here in the overnight on a short covering rally, which is weak and weakens the market. Also left behind a poor low in the overnight, which can become a target for price. So we're just monitoring this morning chop to see which way we break out. Adele, yes. I mean, the short covering rally is basically a spike. I mean, it's just a matter of terminology. A spike specifically refers to a thing that happens like at the end of the day. But yeah, I mean, it's essentially the same thing, right? The spike down is panic selling, right? The buyers that were stepping in on Friday at these levels, as soon as they broke on the low, they started to panic and they all exited their trades, all these longs. So this is like closing of shorts that causes this, right? I'm sorry, closing of longs that were piling in here causes this. And then this push up, which happened obviously in the exact same place. We have the same single print, same area, was just the reversal of that, right? People who got overly short here got nothing for it. When the market got back above these levels, got back above where we closed on Friday, they exited those shorts, causing the short covering rally. Okay, so yeah, it's basically just the flipping of contracts from one to the other. The bottom, I know that the low in the overnight is poor because there's no excess, we need 2 ticks of excess. What that means is the letters here, the TPOs, we need 2 of them below any other reference for it to be a good low. So essentially, just waiting for this drawing tool to load. Okay, so yeah, basically you needed 2 more ends, right? That would be a good low. But the fact that we don't makes it poor. Okay. I don't normally pay much attention to poor lows in the overnight. I kind of ignore poor lows and weak references in the overnight just because they're nowhere near as potent as regular trading hours. But to me, it's worth putting in the narrative, right? This morning, I'm constantly trying to ask myself what the market is doing and how good of a job it's doing of it. If the market was trying to recover last night, if it was trying to have good two-sided trade, allowing all the short traders to exit the market and the long traders to enter where they want, and you have good taper and good excess at the low, right? Then I might be thinking that could be the low. And so I wouldn't be worried about it. But the fact that we couldn't get a good two-way auction process down there, which is what we learned from the poor low, is that it just wasn't a good auction process. I need to add that to my narrative because my narrative is already so bullish on the short covering rally and the value being lower and the trend being down. All of those things are bearish, so I ought not ignore one more bearish signal in the poor low. That being said, I still see it. I see an easy opportunity for the market to come down here and find support either at the base of the spike down from Friday, the base of the single prints up from overnight, or the low from Friday, right, where all this big node of volume is. So we don't necessarily have to come repair this poor low from overnight. I just want to be aware that it's there. Yeah, Marco, I think that's very wise. You know, we're stuck between a rock and a hard place here, and we don't know which way the market's going to go. We also know that there's going to be chop because we opened inside the previous day's range, inside the previous day's value area. We know the market's going to grind up and down in here. We just don't know which direction out of this grind it's going to go. And so I do often recommend to traders for the first half an hour, hour of the day when you open inside the previous day's range, you just sit back and watch. Just let the market do its thing. It'll give you a better signal on where it's going soon. Pug pack, that could be right. On the idea that people just close contracts Friday, open new contracts on Sunday as a rollover, could be the case. Good morning, Philip. Yeah, Nav, thank you for reminding me of that. I didn't bring that up this morning. But yeah, spike rules were in play this morning because of the spike we created on Friday. So just to help visualize that, from the place where the single prints start, this is the spike here. Okay. So what spike excuse me, what spike rules tell us is that if you open the next day above the spike, it's bullish. So that's what we did. We opened up here, so it's bullish. Okay. If you open inside the spike, so if we opened inside of this range, it increases the odds of sideways movement. And then if you open below the spike, that's very bearish. Okay. And the way I would like a little caveat I would add to spike rules is that if the spike is down, like it was on Friday, opening above it is bullish, but it's not that bullish. It's just bullish, right? It's just like a little baby bullish. Okay. Just one little signal. Opening inside of it really doesn't mean much, right? It just means continued uncertainty. But if you have a spike down and you open below it, that is extremely bearish. Like it really increases the odds that the market wants to sell off further. Okay, and vice versa. So if the spike had been up and we opened above it, that would be very bullish that the market wanted to go higher. Speaking of being bullish, if the market is able to get to repair these 2-week references above and then start to bring in some volume right around the overnight high here, that would be bullish to me. Arthur, I'm so sorry to hear that about your trades on Friday. Purely for the purpose of honing your skills, it's worth remembering that when you get to that last 30 minutes of the day, the M period, particularly the last 10 minutes of that, what we have come to call the murder bot, you always want to have a good, safe stop set in any trades you take, because the market can move very quickly and with a lot of volatility in either direction. All right. Well, the internals are staying bullish here, staying above the zero line. It looks like we passed up through the 20 moving average from below on the 15-minute candles and are now finding support there. So that's another little bullish signal. It's not really good taper at the low here, but it's not the end of the world. It's acceptable. So the question now is the market just trying to push up here to repair this now poor high that we created in the A period, in which case it'll just sell off right back down? Or does it bring in new buyers, right? Do we start to build up some volume right up here where we are now? In which case we're likely setting ourselves up for a continuation higher. Okay, so there's the repair. Now we're looking for the volume to step in. We essentially don't want to pull like below these nodes. We could even call it the opening. We want to stay above the opening price now. If we can, that is bullish. We also just pulled value slightly overlapping to higher than yesterday's value. That is neutral to bullish. Dr. Vijay and Naif in the house. Bonjour. Okay, worth noting, they really do need to come back in here and backfill some volume. 100 contracts just isn't enough. But this is bullish to see. So once again, we're looking for the market to pull back down towards the overnight high and then put in some volume here. Okay, again, feels like short covering. We're back up into that gap we left behind on Friday. Okay, so that gap is filled that we left behind on Friday. Another bullish indicator. But remember, we need to pull back down to this 41.77 level before any push higher can really be sustainable. What makes me say short covering? The tempo and the volume, right? This is people panicking right now. It could, of course, be FOMO. It could be people panicking into long trades, but I doubt that, right? There's a very bearish overtone in the market. So I don't think people are panicking into going long. I think they're cautiously going long. And so I assume any panic that I see in the market, any rapid tempo, low volume move, is short covering. As always, guys, please smash that like button if you feel like you're getting any value from what I'm saying here. That's just a great way you can support the channel and support my growth. Those likes really do make a difference. It's not just a thing that YouTubers ask randomly. It actually really genuinely does help us. So if you can find it in your heart to hit that thumbs up, I'd sure appreciate it. There you go. There's your one-time framing higher. One more bullish signal from the market here. But again, I just caution anyone who's going long here. Nothing wrong with going long. You got lots of bullish signals lining up, but you do know you have the risk of the market needing to pull back down to the overnight high and put in some support there. So going long at this point is a bit of a FOMO trade, but the market is trending higher. So if that's a risk you're willing to take, jump in. Nav Trader, yes, it is a sign that the buyers won. So when the volume started to pile up right there, because it was right below that gap fill, it really could have been either way. It could have been buyers or sellers. But now we know because it broke out from that to the upside that, yeah, it was buyers piling in right there. But I just caution people, man, it's a bull market, you know? I just caution people in understanding the difference between short covering and new money buying. That if these are people who went short over the last few days who are just exiting their trades here this morning because they didn't get any further downside for it, that actually weakens the market. It doesn't make it stronger, it weakens it. So you get what's called like a dead cat bounce, where the market pushes higher and tricks everyone into thinking, oh, we're ready to that was our low and we're ready to push higher. But there really isn't an appetite for buyers, so the market sells right back off. So yes, this is bullish. This is market trending higher. It's got some legs. It's got plenty of room to the upside, obviously, to get back into old balancing areas. So this is bullish and worth trading. I just caution people to keep in mind that the push from down here up to here was short covering, and the push from here, from this node of volume up to here, was also short covering. So it's not strong hands pushing the market higher right now. It's old, weak hands getting squeezed out. So the good news, if you're long the market, is they can go quite a ways, right? They can keep exiting and keep pushing, and new FOMO buyers pile on and push it even harder. It just retraces very quickly when it does. So definitely trade with stops. Jay, yes, the POC is at about 41.83. It's the green letters that you see running across there. One thing worth noting for those of you that are newer to the profile, on a rotational day, on a day where the market is just going up and down, the POC is considered the fairest price to do business. So you never ever want to take a trade at the POC on a rotational day, because then you're doing business at the fairest price. And we make money in trading by having an edge on price. But on a trending day, you can pretty much just ignore that POC because it's just going to work its way higher as the day continues. Instead, on a trending day, I'm more focused on value, which here looks wonderful, overlapping to higher, looks great, very bullish, and on one time framing, which right now the market is currently one time framing higher, which just means the B period high has stayed above the A period high. I'm sorry, the B period low stayed above the A period low. And the C period low, if it can stay above the B period, and so on and so forth, then the trend continues for the rest of the day. And it seems like it's overly simple. Charles, you just watch for higher lows each 30 minutes, that's it? Yep. And as long as they keep going, the price of the market will keep going higher. And when they stop, when you finally get one of these 30-minute time periods that goes lower than the previous, that is when the market is often done trending higher and begins to rotate around that price level. Okay? So at this moment, that is what I'm watching. I'm playing longs very tight stops, because I know that this is short covering that got me here, and so we could pull back down very quickly, but I am going with the trend. Okay? The trend is up. Oh, Jay, if you just go down to the corner of the screen on YouTube and just click that little wheel thing, you can change the you can change the settings of YouTube to HD. And that should make it nice and clear for you. Let's jump on over and take a look at the cues. Okay, well, the cues are forming kind of a larger balancing area here, which is kind of interesting. Worth keeping an eye on. Yeah, I mean, to me, now that I'm looking at this, hold on, let me just zoom back out for a second. This actually looks kind of bullish to me. The fact that the ES is selling off so terribly on Friday, and yet the NQ kind of stayed in its previous day's range. That is kind of bullish. That this market didn't need to sell off. Very interesting. But anyway, larger balancing area clearly happening here. So breaking out of that balance could lead to further continuation either side, right? Breaking below the low here could lead to further downside continuation and the high further upside. Okay, so the question was, is 14,600 resistance on the NQ? 14,600. Wow, that's pretty far away, brother. I have no data to look at up there. So unfortunately, I cannot tell you. I will say the high of that value area should act as temporary resistance, right? So that would be 14,134, that general area. But like I said, if it pushes through that, comes back down and finds support, that would be very bullish for continued upside moves. As of now on the NQ, though, 2 seconds after I go, actually, this is kind of bullish. The NQ is more bearish than the ES today, obviously. Value being overlapping to lower as opposed to overlapping to higher on the ES. Also, you're still inside of the overnight range on the NQ. You actually explored lower, so that is more bearish than the ES, which is going higher. So once again today, as has been the case the last few weeks, it seems like it is the tale of two markets, each doing their own thing. 14,060. Let me go back and look. 14,060. Oh, okay. Yeah, I mean, you had this node of volume from the 16th over here, but that doesn't stand out as particular resistance to me. The resistance was this node up here, right? So you're looking at, Jesus, you may have just created a poor high as well in the NQ because you're right at Friday's open. One tick off. Yep, it's a poor high. Okay, back to the ES, which is still pushing. Push it, push it. Bring in the FOMO. Daniel, I don't look at Delta specifically, but I am looking at the market internals here, the advancers versus decliners, the breadth, and the ticks. So they give me a pretty good idea of what up volume and down volume and so on and so forth is doing. Yeah, I mean, waiting for dips now is tricky, right? The market has put us in a tricky position because really, as I've been mentioning all morning, it needs to come back to that overnight high and backfill this volume. I'm just telling you, I don't know how many times I've done this, got on the channel when the market is trending higher like this and everybody's in FOMO mode. And I've been like, look, there's only 150 contracts down here. This is going to need to backfill. And they ignore me all day long. And most of them don't get into the long trade because they're waiting for a pullback. So they let the market push higher and higher and higher, right? It keeps going each time period, higher and higher and higher. And then finally, it starts to pull back, and they go, yay, and they all pile on right there. And then the market shits all the way back down. To backfill this volume here, right? So a lot of times on a trending day like today, on a very emotional trending day, the best policy can just be to just friggin' go long. Just enter a trade, get in a position, pucker up your butthole real tight, and just wait till the next leg higher. Because obviously entering long here on one time framing, very difficult, right? Because you'd have to wait for the market to get all the way down below the low of the day to get out on one time framing. But if you wait until C period, if you wait another 10 minutes to enter, the market might be up here. So sometimes on a trending day like this, the trick is just to enter a trade, set your stop loss, and just hold on tight. NQ selling off, man. Found some resistance in that 20. Trending down on the ticks. Okay, got good taper on the high here, but don't like the 36 contracts. Would have liked to have put in a few more there. What was a good time to go long today? It's again, I hate when people ask questions like that. It's up to you. How do you trade? Are you a scalper? Are you a long-term trader? Are you a swing trader? Like, how do you trade? I don't know if it's a good time to go long. I mean, I would say probably the first opportunity to go long was when we broke out above. I'm sorry, down here when we broke out above that overnight high. You know, that was the first indication. We had just barely pulled the value area to overlapping to higher. And it was like the market was, I forget what the other signals were, but the market was sending a couple of signals that was like, okay, the market's ready to break out here. But then as soon as it did, I didn't go long because I was looking at this volume node. So there was an entry long right here that could have got you all these profits, but it would have to match your trading style. For me, it didn't match my trading style. For me, there hasn't been a trade yet today, right? I can't go long until I have better support on a pullback. So yeah, it's just each person has to develop their own trading system that works for them. Love the train analogy. I love to use that one for trading. And what do I always say? If you miss this train, there'll be another one along shortly. There's always another trade. Okay, so C period, same as the A period and the B period. The trend continues higher. The one time framing continues higher. But we've got the single prints. Okay. These are likely to get backfilled at some point today, as well as these low volume nodes around that 4177 level, also likely to get backfilled at some point today. So the market continues to trend higher, which is bullish, and that trend can continue as long as it must. But just keep in mind, it's setting itself up to pull back at some point today, and it will likely be violent because a lot of the buyers in here are FOMO. A lot of them don't know why they're buying. They just can't not buy. And so as soon as those trades start to go against them, they'll exit very quickly. Yes, thank you for the heads up on that, Chris. I also got that email this morning. I haven't had any problems with my trades, and I use CQG. So, so far, so good. But that is worth keeping in mind. All right, guys. Well, with that, I shall bid you farewell. Adieu. Enjoy the rest of your day. It's a Monday. That's a fun day. So I hope you have a great time and you make lots of money in the markets. I will be back tomorrow morning. For those of you that are in the Brigade, head on over to the Pirate Trader Brigade website. Give me about 5 minutes and that live stream should be up and running. If you're not already a member, there's a link in the description. It costs $10 a month and you can stay with the stream for the rest of the trading day. All right, guys. Have a great one. Bye-bye.